Very helpful there, but let's move on. Crude prices saw a big 5% slump overnight on worries of a global economic slowdown and rising COVID cases in China. In the last two sessions alone, crude prices have slipped 10%. To discuss the outlook amidst the shaky global setup, David Lennox, analyst at Fat Profits, joins us now. David, good morning and Happy New Year to you. Hope the year has begun on a good note for you. It hasn't for the crude bulls. What are your thoughts? Do you see further pressure?
Oh, good morning and Happy New Year to you all as well. Look, yes, one would certainly suggest that the crude markets are reacting quite savagely to the prospects of a global recession, and also, as you've suggested, what's happening inside China. Yes, we've seen the Chinese authorities move to soften their COVID policies, but unfortunately the impact on the broader populace is yet to be felt. And while we still see continuous disruptions in the real population, that's going to continue to cause concern for the broader oil prices and, for that matter, the commodities. However, if you start to have a look slightly longer term, at least we now have seen that policy shift. So we only need to see the Chinese authorities start to improve the way in which they're handling the pandemic inside their populations. And that will very quickly get the market swinging back to a more, we believe, positive trend to the upside. So overall, we think that the oil price, yes, we are seeing that weakness, and yes, we are seeing perhaps weakness in the global, broader global economy. But when you start to look to the other side of both of these events, we do think with the lack of investment that we're seeing inside the industry, it does make for a very good oil price probably towards the end of 2023.
Okay. David, good morning and Happy New Year from my end as well. If you can tell us, I mean, how bad does it get, this pressure, the near-term pressure on crude? Do we see 60s?
No, look, we think at this stage we probably won't see it visit the $60 level. It may drift into the 60 to 70 region, but we don't think it'll stay there very long, because we're well aware that OPEC was quite supportive of trying to get the oil price to do something not too long ago, and that succeeded for a little while. So OPEC will, we believe, stand in there and perhaps start to cut production if they do see that price heading anywhere towards that with a 6-0 in front of it. So look, overall, with OPEC possibly standing in there and looking to cut production if we see it falling further, with the prospects that, yes, the shift in the policy inside China has occurred. They just need to get their population now more broadly accepting of how to deal with the pandemic, and also the fact that we are seeing perhaps an underinvestment in the industry. As I say, it's going to be to the top side that we'd be looking for the oil price towards the latter part of this year. Look for volatility in the near term, yes, but we think the trend is going to be higher as we head towards 24.
That's not exactly music to our ears. Our country is a huge importer. But, can you time this? When do you expect this lack of investment in fossil fuels to catch up? Can the uptrend start as early as after the lunar holidays are over in China? Or will it be, much later, maybe second quarter of this year?
I certainly would probably be towards the middle of the year. It's not going to be an instant thing, and it's something that we've been well aware of for some time, that there's been a lack of investment across the energy sector in obviously carbon-based energy sources. So from that point of view, we're well aware of it. But from time to time, markets lose sight of that. And obviously, at the moment, with the other factors that are imposed on the oil price, they've lost sight of that. But it will come back into focus. But it will probably take a further 3 or 4 months. We really do need to see the Chinese population become more organised with the way in which they are dealing with COVID. The policy shift has been made. So we would be looking towards certainly the middle of this year for that oil price to start trending higher.
Okay, if you can just leave us with a range for this quarter itself. You said it's not impossible that it dips below 70 for a smidge, but what's the range?
Look, at this stage, we haven't got a 6 in front of our price. We think it'll stay probably between 70 and 80. And then for the rest of the year, we probably think it will head back towards $90 to $100.
Okay, 90 to 100, not looking pleasing. Thank you very much. David Lennox, it was a pleasure having you with us. Have a fabulous 2023.
You too.
Okay. Well, let's get back to our guest. Nischal Maheshwari has been with us and very patiently. Thank you very much, Nischal, for your patience. You know, one stock that's actually done well every day of the new year